What's up, guys? What's going on? How's everybody doing? Let me pull the stream to the side. Should be good to go. I always do the sound roll call, but I think by now the sound issues haven't worked out. We haven't had any ghosts in the machine as of lately. What's going on, everybody? My name is Ryan, aka CanteringClark, and you're watching Trading with CanteringClark. So yeah, this is going to be a new stream. The crypto and coffee stream, it's not really crypto and coffee anymore because we're not doing it at 9 o'clock in the morning like we were previously. So it's 12 p.m. my time, New York time, and yeah, that's the afternoon. So this is around lunch. So trading with CanteringClark, trading Bitcoin with CanteringClark, with also some touching upon other pairs as well, obviously. This is going to be a little bit more of a focused stream than the last streams. And I'll get into that in a second. Let me just make sure that everyone can hear me nice and clearly, right? Sound is great. I appreciate that quick feedback. All right. D. Ross, X Factor, Jack, JR. Okay, what's going on? No Coiner, Luna, Stom. What's going on, my man? Randall. Okay, Dave, Michael, Adrian, Crypto Rise. Bearish sweet nothings only, sir. Okay, so we have a good amount of people in the stream. We don't have the amount of likes that I would like. And again, in the beginning, I've always gone over sort of all the same shit over and over again. By now, if you're watching the stream, you know what to expect. Okay, the reason why we like likes is not because we have an inadequate amount of dopamine on our normal day-to-day basis, but rather just going through life. But we are looking to be prioritized by the YouTube algo. So it's very simple, right? We want you to use the likes like a voting mechanism, and that's essentially what they are. So on behalf of my partner, Josh Rager, I want to thank you guys for tuning in. And I said this stream is going to change, okay? So I'm going to hit the basic stuff in the beginning. Like I said, introduce myself, tell you that, we are partners with Phemex. So Phemex.trade, if you go there, you get discounted trading fees. It's where I do my futures trading for some of the more popular DeFi pairs. It's not really where I focus most of my Bitcoin trading, so I want to be as transparent as possible. All right. It's a phenomenal exchange. A lot of the things that they've integrated are based on the advice of myself and Josh, right? We work very closely with the team. We work directly with the team. We're not just shilling a ref link. If you do use our ref link, though, like I said, you will be compensated in the form of some sort of return with regard to your transaction costs. So sometimes it's 10%. Sometimes they run a different special. If you sign up and you see that there's a new special going on, feel free to reach out to me and I will get you that special. So that's our partner, right? We have the BlockRoots trading platform. It's not a trading platform. It's a trading education platform, and it's not just a run-of-the-mill education platform. We're not just spitting out what Baby Pips has, and curating some kind of 101 stuff. Moving forward, if you've gone to BlockRoots before, you can see that there's a little bit of a change with regard to the website. Now I'm getting more specifically just into market profile and order flow. That's my bread and butter. Honestly, I just found that what I was doing recently was catering to everyone else and kind of forgetting about what I really enjoy. And it felt like when I'm doing the streams, for example, I'm touching on a ton of different ways to look at the market. It feels like I am essentially just imagine I was a high school math teacher and I had to also teach high school English. Like, just imagine any other comparison. I'm going through something that I should know, but it's not what I'm interested in doing. It's certainly not where my passion is going to come out. And you can't go through life doing things that you have to be willing to say no, and you have to go through life making sure that you're doing things that make you happy, right? Hopefully not at the expense of others, but With that being said, I just want to make sure that everyone is here of their own volition. No one is being forced to be here. If you are being forced to be here, type something cryptic. But otherwise, understand why you're here, right? You're here because moving forward, we're going to be focusing on primarily where my area of competence is, right? When I do the stream, it's going to be on my area of competence. When Josh hops on, when Josh does videos, as you see, he does a lot of videos that are posted, not live streams. He'll be dealing in his area of competence, and it allows us to be true to ourselves, and I think that you benefit more from that. And honestly, the best way I could put this is you have your other streamers that are on YouTube, right? And you have the ones that I've said are worth putting up on a pedestal. Someone like CryptoCred, for example. He's going to go over ad nauseum price action, important things with regard to price action. That is how he trades, okay? I am going to, and you're going to learn things from him that you're not going to learn from other people, and I'm going to hopefully be able to teach you things that you can't just look at a chart and see right away. All right, we're not interested in showing you what you already can see. We're trying to show you in these streams what maybe you don't see and that you should see. So when it comes to market profile, nothing special about it. So if you're new to the stream and you're looking at the profile and you're thinking, what the fuck am I looking at? And I'm just going to be honest with you guys. I am very blunt and very frank. So, occasionally I drop the F-bomb. I'm, born and raised New Yorker, Italian and Greek. So it just is the way it is. It doesn't mean that I'm not articulate or not eloquent. It just sometimes fuck is the most dynamic word in the English language, right? It has more applications than any other word I could think of. So market profile, you might look at it and think, well, that looks really complicated. Actually, it's really simple. It's just a data organization tool. And then order flow, this is the rawest information that we can have about what actually takes place in the market and what actually matters, right? Do you care about, the closing price based on the candle close, or do you care about the price based on the wick? Is it a matter of how many times this line touched and that line touched and this moving average over this moving average? Or where the RSI sits, and most people look at the RSI, they don't even know why they're seeing a divergence. They don't even stop to think, oh, the RSI's got 14 periods. I'm looking at 6 right now. No shit. Things are a little bit weird, right? This is just the calculation based on, moves upward versus moves downward. So when you're looking at order flow, you get to see, oh, this is where buyers actually were interested in. And what moves price up again? Oh, it's when there are more buyers than sellers. Maybe I should focus on that. So that's what we're going to be doing moving forward. These streams are going to be blunt. They're going to be to the point. Hopefully we'll leave you something that you can take after the stream. I have some points that I want to touch on at the end of the stream. Just sort of like New Year's resolutions, best practices, things that I think that we should always be mindful of, no matter what time of the year it is. But I think that the benefit of the New Year is it does allow us this sort of idea of a reset, right? We all know it's kind of bullshit. Right, the most popular time of the highest amount of gym memberships are maybe in the first 2 weeks after New Year's, but after that, people fall back into bad habits, right? So hopefully when we remind ourselves of things, you write them down, right? So I'm going to write these down on the screen because it's a way of reaffirming it to myself, and by teaching it, I'm teaching myself constantly over and over again. But yeah, that's the way it's going to be. So we're going to take a look at BTC, and then we're going to take a look at some of the other pairs that I think are worth looking at. We're going to go over why I think they're worth looking at them. A lot of the times I ask, hey, do you want to see a pair? And I get 50 fucking pairs in the chat that I could give two shits about. But if I am to show that in my countenance by my immediate lack of, let's say, enthusiasm, if I'm going to say something about it, of course I'm going to hurt someone's feelings. But maybe that's the best thing. Right? Maybe it's the best thing for someone's feelings to get hurt. The same way it's the best idea for you to learn about a hot stove by burning your hand. Maybe it's the best idea for people to make the mistake of getting involved in XRP and learning from that, right? Versus continuously being sort of catered to and I guess I was talking about me doing the streams and charting pairs that I really could care less about, and if I could care less about them, I feel like I have a pretty good hold on things, and it's not just for some arbitrary reason, it's because the chart looks like shit. So I'll still take some suggestions and I'll go through them, and if I chart it, then you've been selected. If I don't chart it, well, I'm not just gonna hop on a stream to point out the support and resistance zones that are, again, they're, it's Google search away. So that's another thing that I'm going to touch on. All right. A lot of the times I get, I don't get trading related questions, but I get questions that are really a Google search away, right? If you're not going to do the work to even try to dig up some of the information, right? If I have to answer something that is just embarrassingly simple. I'm going to make a joke about it the first time, but I think that there's a good amount to be said for someone who is a good trader and also is good at looking into things themselves to a certain degree. So there'll be no hand holding here, right? I think that is something that's worth pointing out. Yeah, so all that being said, and keeping this as genuine as possible, as always, we don't have any sponsorships that we're worried about losing if we say the word fuck or if we do this and do that or piss someone off. So I think that this is going to be a really good stream moving forward with this sort of approach. So let me make sure that I say hi to everybody. I did say hi to everyone so far. Yeah, the likes are looking good. I'm not going to ask for a specific amount of likes. I watch other people's streams, and I get this sort of feeling of just discomfort when they say shit like that. So I really could care less, honestly. It's not my dopamine levels. I trade for a living. I make a fuck ton of money trading. And if you want to learn how I do that and follow my footsteps, then be sure to hang out a little bit longer. Okay, do you have a look at DOT? So I will have a look at DOT. So absolutely we'll have a look at DOT. I think it's really important to look at DOT right now. And in the beginning, I'm going to get into why I look at certain things to begin with. Okay, the stream has moved from BlockRoots 101 to BlockRoots 201. Yeah. Since there's a lot of division between quite a lot of respectable traders on CVT about Link BTC, yeah, I'll take a look at it. Okay. All right, good stuff. So first things first. Okay, let's just look at the trading view chart. So again, this is a new BlockRoots profile. Go to www.blockroots.com. For some reason, right now, just typing in BlockRoots is not sufficient. But this is our new platform if you want to learn all the things in more detail that we're going to go over. So first things first, what do you want to trade, right? What are you interested in? What should you be interested in? You should be interested in other things that if you're trading, other people are helping facilitate that process. So is it moving, right? Is it moving relative to maybe not moving recently? Is there any kind of increase in relative volume? Is there any kind of increase in change in the last hour, 24 hours? These are very simple things to use to help you filter out what is maybe worth paying attention to rather than marrying into an idea or a narrative. So filter them out based on whether or not there's activity, because that's what you need when you're trading. You need activity, right? You need activity and you need liquidity. So if we're looking at the market today, what's moving in the last hour? You can immediately see that Sushi is, Uniswap is, Compound is. There's a few popular tokens and popular coins that come up quite frequently. So this is a good sign, right? These are on the move. In the last 24 hours, we're looking at the same sort of thing. XRP is moving because it's taking its dying breath still. Uniswap, again, falling within the last 24 hours of a relative increase in price. Another thing is volume. You want to see that there's an adequate amount of volume. Now, the problem is if you're looking at volume and filtering coins out based on volume, you get a lot of the dead assets because, of course, they're going to have more trading volume if they're on every single exchange already. So what this might do is incorrectly filter out some things that are worth paying attention to and are actually better to trade than the things that actually have higher volume because they're sort of these legacy assets in crypto. So what I like to do is make sure that there's a little bit of an even middle ground between things that are moving, things that are increasing in relative volume, things that are liquid, and things that are traded. You could imagine how you would go about combining these, right? So you're checking to make sure that it's moving. You have a visual representation of that. Maybe it's moving against a previous resistance. It's through a previous resistance. Oh, we see that there's a good amount of activity. It's a good amount of trading volume behind it. And again, check out the spread. Make sure that there is not a ridiculous cost that you're going to incur by jumping it, right? If you're going to be chasing something, because a lot of the times, if you're an informed trader, you're going to be taking from the market. So this is a lot of times what I do. I want to make sure that something is moving before I actually get involved in it. And of course, I think I have a pretty good hand on this based on just having a finger on the pulse in the crypto market. But if you're new, you might not know where to start, right? So go to something like CoinGecko, go to something like CoinMarketCap, make sure that there's a relative increase in volume, make sure that, again, it has liquidity. So if we're just going to pick out a random asset, hey, do I want to trade... let's say, Vitae? Sounds good. Sounds like water, right? Sounds like a special brand of water that's just water, but it's branded as something more important. So this is the 2% depth for Vitae is $4,900, okay, and $14,000, okay. So this is not liquid. So for me, right away, I'm thinking, well, if this is not a really informed Uniswap punt, I don't really want to trade this. Right. And by a Uniswap punt, I mean something that I'm basically throwing money at. I don't care about the levels per se. I'm expecting maybe a narrative to kick off or a certain amount of FOMO to come into it. I have good reason to get into it. I'm not really caring too much about the amount of slippage I might incur. So this is a way to pay attention to liquidity. You could look at the 2% depth, right? That's fair, right? Consider this, okay, if I wanted to, let's say that I wanted to throw $30,000 at this position, well, I know that that's not available within 2% of the current price. Okay, so I'm going to be buying from the book. I'm going to be lifting from the offer, and I'm going to be slipping at least that amount, or I'm going to be hitting into the bid and slipping by that amount as well. Obviously, one side is a little bit better in this case. So that being said, let's take a look at BTC. All right, so I want to touch on some things. So I have my little notepad. Make sure that I have everything to the side. Put this down. All right, so let's pull the notepad up real quick. Okay. One sec, OBS. All right. Okay, so the notepad is on the screen. So first things first, all right? One sec before I say that and act like I'm going off right now. Check the chat. Okay, so first things first. Okay, where are the most significant levels? So where, one sec, move this over slightly. Can you guys see? Good stuff. All right. All right, where are our significant I am sucking at type significant levels where we can expect an increase in participation. It's funny because I normally type a lot faster than this, but I think because I'm actually typing on the spot right now, I am not typing fast. I did a type test with my wife the other day. Can't remember how many letters, words I was able to type in the amount of time, but it was pretty fast. Where are our significant levels? Where can we expect an increase in participation, right? So this is where I start with that market profile. Okay, so other levels that, levels that other traders define to be important, you should probably define to be important as well, especially when they're high time frame levels, because you're going to see an increase in participation at these levels, right? So what is a significant level? Well, the only significant levels we have around us are this weekly down here around 19,000. Okay, if we go onto the daily right there, we can see that we have that weekly, which is right down here. There's no real structure between that on the weekly chart, and then the daily chart, we have this cluster between where we sit and that. So a little structure right here, so right around 26. And I'm going to highlight these, but I'm not going to make sure they're precise. I'm just trying to draw your attention to it. So this cluster right here, it's what I would consider, it's probably not the strongest level, but it's a level where we might expect some participation. By that I mean, if we trade back into it, will we see a kickback by the other side of the market? Since we're trading above them, will we see buyers defend these levels? So I would say in orders of magnitude, or rather in order of importance, this is probably 1, this is 2, and then this is definitely 3. And in this case, it works out that way, that it goes 1, 2, 3. And that's because if you look at this, and then this, and then this, you can see there's a significant change in the structure, right? There's a significant change in rather the, I would say the foundation of what we have under us. It's gone from being very wide to being more narrow. So this is, when I start to see a pattern like this, I do get a little bit concerned, right? Because it's the same way that, what you want to do is when you build any kind of structure, you want to build it from a strong base. And the further up you extend, the more you rely on the actual strength, I think, of that. In the case that there is an imbalance, that it doesn't just topple over. All right. So significant levels where we see an increase in participation, and you have to pay attention to them because most daily levels, weekly levels are going to be acted upon, and especially in this kind of trend, they're going to be seen as great value opportunities to get involved in the trend. And this is where in another stream I touch on moving averages, but if you want to learn about moving averages, again, it's something that's just derived from price. Feel free to check out some easily found information on YouTube and Google. But what we're looking at right now is areas within structure where we'll see an increase in participation, right? Where we'll see activity between buyers and sellers. And again, we're approaching from the upside, so it means buyers stepping in. The last thing you want to see is as you move lower, sellers become more interested, right? And just think about this, if something is valuable and we see that it drops in price, we shouldn't really see that sellers want to sell at those levels, right? We should see that sellers are more confident in selling at higher prices. They become less interested at lower prices, and that when price drops, we see rather the inverse of that behavior, and we see buyers become more eager to scoop up any opportunity they can. So it's basic auction market theory stuff. So Here are significant levels. We'll just put on my levels on the chart now because you can see I already have some of them listed. All right, and then we go down to some of the other levels. All right, so this is where we're going to get into the profile. Okay, what is the profile indicating? Okay, so what this means is, are we in balance or are we imbalanced? Always sounds funny when you say imbalanced and imbalanced. All right, so are we in balance? Are we imbalanced or are we balanced, right? So if we're looking at the profile right now, okay, so we have a BitMEX's profile and I have the CME as well. All right, so we have the CME now. Okay, but we'll stay on BitMEX because not everyone has access to the CME data or is going to be paying for that. So BitMEX, and you can see that Bybit is basically the same exact thing. I'm charting both. I'm paying attention to both. I've gone over why I'm doing this many times. It's because BitMEX is still kind of relevant. Bybit definitely is the home of the retail, I'd say the retail idiots now. But we're looking at the profile. So when we're looking at the profile, what we're really looking to identify is, where is value developing? Okay, so where is value developing? Where are we balanced or are we imbalanced? So this is a balanced profile, right? So real quick, let's make a color that's accessible on any screen. This is a somewhat balanced profile. This is a very balanced profile. This is also a very balanced profile. This is slightly more imbalanced, but it's a pretty normal distribution. And then this is imbalanced, right? So what is imbalance? An imbalance is what marks a trend, right? Constantly one side is in control and essentially imposing their will on the other side of the market. So in this case, buyers are raising or constantly buying this up at any opportunity, allowing less of a pullback. This is an imbalanced structure. Balanced structures like this are more of an indication of agreement. So are buyers or sellers in agreement or are they in non-agreement? Okay, so when we have a structure like this where we have a period of value migration, so value, 70% of the activity taking place within here, moving up over time. That's part of a trend, right? The price, the value is rising. And then this period is value overlap, and that's where ranges begin. And people have really arbitrary ways of looking at ranges. People talk about ranges about 4 or 5 days after they've already developed, as if they're trading them and there's still a range. But at that point, it might as well be over if you don't have an idea of how long ranges are normally going to be expected to last for, right? But if you're looking for a range, it's always easier in hindsight. But how do you find it how do you find a range developing in the beginning? We have to have some type of thesis for a high put in, a low put in, and then at least the beginning of value overlap. So at least spending the day or most of the time within the prior day's value. So this is a case of value overlap. Value area, if we're extending that forward, value area and your entire value area of the day prior or this day has developed within this range. So that's a day into it, right? But it's better than nothing. So you could start to see maybe if you're respecting the highs and the lows, if there's absorption at the high, if there's absorption at the low, right? You're seeing momentum taper off at the high, selling momentum taper off at the low. These other signs that you would look for to identify that maybe we're beginning to shift from a period of value migration to a period of relative agreement, right? Value overlap, right? Or what will result in value overlap. So this structure, pretty balanced. These are not necessarily in perfect balance with each other, but you could say that this area is relatively balanced compared to something like the area that preceded it, right? So what we would look for in a balanced structure, what we would see is relative agreement towards the center. Right now you've had pretty much a breakout of this structure, but we would still look for the confirmation at the highs and the lows that, you know, in this case, if we're moving up towards the high, we want to see that buyers become more aggressive about this. We don't want to see them taper off. We don't want to see absorption at the high. We want to see that we're falling out of balance, right? And you're going to see, if anything, either a case for the opposite or for that occur based on an imbalance either occurring in continuation, right? Buyers are more imbalanced over here, or sellers, again, begin to shift and it becomes more imbalanced in the favors of sellers, and buyers, again, step off. I say taper off, step off, same thing. So what kind of setup do we have, right? And this is just a really quick idea of how we go about looking at the profile and how we do a top-down analysis. What we're really trying to identify, all right, is, okay, where are the important levels where we can look to in order to see a reaction, therefore find a trade. Is it therefore like that? God, I remember to spell. Find a trading opportunity. So the point of this, the point of mapping out structure, the point of, let's say having a daily level. Well, let's just find the daily level real quick. The daily close, or this close, is up here. The highest daily close so far appears to be right here. The point of having, so what we're looking at is the highest daily close initially is right here, the red dot down there. So that's the lowest daily close. And then the highest close of this cluster is up here. I can see it in the red. You might not be able to see it. It's right around 27.4 and then 26.250. The purpose of this is we have the levels derived from daily, weekly levels, right? Important support and resistances that you should always be mindful of, because again, why would you want to fade where the bulk of the activity is going to be acting on, right? Or the area the bulk of the market is going to be acting on. And then we're breaking it down into lower levels, right? So we have a composite that's formed within these profiles. So if we just combine this, so we could see that from this balanced area, we have this composite. And I'm going to capture the volume profile high, TPO high. Yes, I'm including this last day that was kind of an end of it. It was a trending, coming off a trending day. It was a very normal, a normal day. It wasn't exactly balanced. It wasn't exactly an imbalanced day. It was just, there was a high amount of dispersion, put it that way. So we have a daily level up here now that matches a value area high. So this is a value area high plus a daily 1D. All right. We have a daily level here, a value area high here. So now we have one really significant level that we could look at right away. Right. So, okay, this is a point that I want to pay attention to. This is a significant level that I want to look to maintain as support if I'm going to say that this imbalance now is leading to an imbalance. And therefore, the continuation of this range is no longer, and we should expect a continuation of this larger continuation structure upward. All right, so this is how a trend resolves itself. It goes from a period of imbalance to consolidation, breakout, imbalance, consolidation, and so forth. And normally at the end of this sort of balanced period, you're going to see compression. So you should see, ideally, the best case scenario, one of the more obvious signs is when you go from a high amount of dispersion, what I mean the size of these moves, to much more tight confines that price is dealing within. You don't exactly get the most picture perfect example of that here. Ideally, what would happen is something like the range of the candles would decrease over time. So you'd see the range, the high to low range, so you get something maybe that looked like this. And then it would become really obvious that it was compressing, right? You could also look at the value area though, right? So where fair value is, that compressing as well. And you can see I have on this, if I just increase the size of this real quick, you can see I have the value area range height. So it goes from 390 to 570. Compression would be if it continued lower, right? If we were going to see, 1020, 390, and then something like 200, right? That would be a clear sign that things are compressing. And that's how markets work, right? They go from a period of expansion to compression back to expansion. Sort of the same way that things work in physics. Some things, rather. So what we're doing is just mapping out significant levels. Okay, so mapping out significant levels where we might be willing to do business or where we should look for a business to be done, right? Because if you're within a range, if we're down here, what's the incentive to get into position, right? Unless you have a really strong long bias and you're looking just to buy any kind of correction, what's the incentive to get into position where everyone is in agreement, right? What you want to do is get involved at the areas where you can expect an imbalance, right? Because you want to be part of, let's say, on the break of this value area high. So let me zoom in. So on the break of this value area high right here and that daily close, you want to be part of the imbalance if buyers begin to shift and control. Right, so price moves above this level, the imbalance that you would look for and the absorption that you would look for at this high would be here, and you know that that would probably be the best place to define the trade, look for the trade setup, and potentially enter into the trade. Right, so the idea is we're mapping out levels so that we're not just getting involved in no man's land. So we're not just looking at the chart thinking buy or sell, buy or sell. Right, which is what a lot of people do when they're new at trading. They look at the chart and they think, okay, do I buy here or do I sell here? And it might not be either, right? There's always a trade that I think that you could always make a case for from a structural standpoint, purely structure. if there was no underlying context, you could always make a case for longs and shorts, right? If we're looking at, and I really want to focus on the fact that I said without context, right? If this it was in a vacuum and we were just trading based on the concepts of auction market theory. If this was a range, right, and we're looking at this as a breakout, this is the long opportunity right here, right? If we maintain this, show signs of absorption here, right? Buyers take control. And then the inverse of that is, hey, if this is where we're accepted, this area right here, if we move to the upside, fail to maintain this high, well, then that's a false breakout, a failed auction, and then moving back within here. Well, technically, that doesn't set up a long anymore, right? If anything, maybe you're looking lower for a long, okay? Or you're looking for maybe the short opportunity back down to the low of the range, right? So, but that would be in a vacuum, right? We don't trade in a vacuum. We actually take context. Context is one of the most important things. So, and then we get down to, upon knowing where these levels are, and again, this is just very simple, making sure that I'm not going too far on this before getting into Bitcoin specifically. Is any one side in control? Is any one side clearly in control? Is any one side off sides? Is it obvious, right? So there are many different ways that we could look at positioning in the market. One of the first things that I like to do on the high time frame is, of course, validate the structure. So yeah, we have a series of higher highs and higher lows, and this is the one thing that I kind of can't stand about some of the other TA channels, and there's just a lot of repetition. It's, yeah, we know, okay, you taught us there's higher lows and higher highs. You say that every time, right? Okay, so we do have higher highs and higher lows. That's great. Show me something else. So in terms of positioning, is there any side that maybe one side is losing control, right? Well, momentum, I would say, is you could make a case for momentum actually picking up because this is becoming more vertical. But if you're looking at the structure from an expansion, imbalance, to compress back to compression again, you can see that it's actually beginning to tighten up, right? So these moves, it's this move, if you consider this as the next pause, these are becoming a little bit tighter. So I don't know, I'm beginning to look at this as maybe a market that is where longs are getting a little bit over aggressive, and longs are definitely in control, but I think we could be approaching a point where they give up a little bit of that control in the short term, right? So one of the things I always want to pay attention to is the funding, the basis, okay? The funding is a derivative of basis. So right now we can see funding is pretty elevated across exchanges. So 7 basis points, 10 basis points. This is kind of unsustainable. 10 basis points and above. You're certainly not going to hold a position for long because it's going to massively eat into your position. And I'll tell you that because I was hedged and I earned quite a little, you know, I don't want to say quite a bit of Bitcoin and make you guys think that I earned like 10 Bitcoin hedging, but I earned a pretty decent amount of Bitcoin just by getting into synthetic USD and capturing a bunch of funding intervals, right? So this is an indication of positioning because what we're seeing is that when the futures market is trading more aggressively than the spot market and doing most of the lifting, it's an indication of leverage positioning, right? And if you don't have price continuing to move upward, that's when it's bad. In this case, we do have price continuing to move upward, so it's not as concerning, I would say, but just another thing to look at, right, on the higher time frame, also with structure. So if I was to give you an example of best case, well, what would I say if we got this breakout right now and we had funding that was neutral? I'd be way more eager to long this with a longer target than this retest that we already had, right, already in and out of a trade because, and I'm in and out of a trade without giving much further to it because we're seeing that the market is kind of crowded. So the last thing I want to do is get caught with my pants down, right? I don't want to get caught off sides, longing, expecting much more, and, you know, we see a clean out of that positioning and, you know, price moves well against me. So these are some ways to look at it, right from the get-go, okay? So what kind of condition is the market in? Where do we sit in relation to important levels? And again, not just levels that I think are important or that someone taught me are important, but levels where most of the market is going to interact with. So you have to get involved. You have to be willing to get involved there because, again, you'll be fading an increased amount of flows. Is the market balanced, imbalanced, right? All these basic things that we go over in more detail on BlockRoots. I think, hi, dickhead. Higher high looks like a dick mood. Okay, yeah, that's interesting. If you don't clean it up and you're just going to go on with that, I'm probably just going to mute you. So let's take a look at BTC, right? After having just gone over that, and I already have my levels on the chart. So this was, and we're being kind of redundant now because we already just went over this. This was a longer composite. Yes, we have gained acceptance to the upside. Yes, there was there is a very consistent bid at these lows. So if you look at these lows right now, if we go on BitMEX, so we'll go on BitMEX and we'll look at something like this 15-minute chart, right? So we're looking at higher time frame, right? Oh, spread that out, okay? We're above the 1-day VWAP, we're above the 7-day VWAPs, or above where most of the risk has been put on in this market again, so that's a good thing, right? Into these lows, we did have a ton of absorption, right? So you see that from low to low, all right, you had, when we look at the CVD, massive increase in selling into that low. So this is a very clear sign of absorption. The one thing that I always really like to see is not that it's just absorbed, right, but that the absorption is actually creating new business. So on Bybit, it wasn't as clear. On BitMEX, it was a little bit clearer because on Bybit with this delta divergence, right, so from the test of this low compared to this low, there was a lot more selling, but there wasn't a really huge increase in open interest. So it wasn't like upon this selling, we trapped a ton of shorts. But I think it's, again, really important to keep context into consideration because this trend is spot driven. So it's not like this trend requires us to trap shorts to move up. It just requires that we have a willing buyer at the low, right? That buyers are continuously willing to bid this higher, right? And again, bid is really important, that they're not just aggressively buying, but they're actually willing to place passive orders and absorb this in the book, right? The heavier hand standing out. So one sec. So we see absorption there at this high now, the break of this level, okay, right into this low. You do have slight absorption, right? You have slight absorption. I said this morning in BlockRoots, it wasn't getting away as fast as I wanted to get away, right? So ideally, when you have a retest like this and a fast-moving breakout, it does that. It's a fast-moving breakout. It doesn't hang around. So I am kind of still erring on the side of caution up here, right? I get it. I'm super bullish, okay? I've captured, I would say, 80% of this trend since March, which has been probably one of my best trading years to date. And it's happened in, a cataclysmic year, which is really, it's a weird thing, right? But there are signs, again, the futures market is overheated. So, the futures market's overheated. We're not seeing this really slipperiness upon leaving this level. So if I'm scalping, one of the things I want to see is immediately you leave the level. But also on the higher time frame, I want to see that too. I want to see a really abrupt response off and away. So sort of like how we had this retest down here and I knew I was wrong to hedge right away because we had an immediate response, okay? Now this is on the 30-minute chart, but just look at the amount of time that's passed between both of these. All right, so what we can see is that this is not necessarily the it doesn't look like buyers are really getting that aggressive off of this retest, right? And again, it does go back to the idea that we are quite extended. This is pretty extended. It can remain extended for a really long time, so it doesn't make sense to try to call the top. But it's important to be mindful, right? Especially if you're just considering getting in a position, if you're considering FOMOing. I do think that at some point we're going to have a reasonably sized correction. I do think that it occurs sometime in January. Most of the time, the spot market and the futures market haven't been close, right? They've been pretty disconnected as we've gotten higher up. That basis has increased, and it's not just because of its higher prices. It's actually increased in percentage as we've moved up. So that's important to recognize. You have to normalize things. And this is also the first sign that maybe we're beginning to see a good amount of kickback by sellers. You could look at on-chain data and say that there hasn't been a ton of whale activity and money hasn't been moved to exchanges, yada, yada, yada. But I'm not going to say what I would say right now. I'll get to at the end. It's one of the points I want to touch on. But I don't want to pay too much attention to that stuff. I want to pay attention to the technicals, right? So we have this retest. That's fine and fantastic. What I would just be mindful of is that there's been many times before where we've had a consolidation and it hasn't just resolved immediately and began a new trend, right? The consolidations have, if we look across Bitcoin, if we look across ETH, they've taken a little bit longer than what we see right here, right? So if we look across ETH, for example, if we just look at highs, so relative to the amount of time we've put in, it's not like there's many times within this that you see that we go from this to resolving immediately upward, versus we go from this to maybe poking up one more time, correcting, and then putting more of a base in. So I want to look at the market as a whole right now. And if I look at ETH and I see that, right, just the way that things are shaping up right now and the way that everybody is excited, I'm also looking at Bitcoin and thinking the same thing. This is not, I think that, we could poke up to 29, poke up to 30, but I would just be careful in thinking that, the 28,000 we're at right now goes to 40,000. I wouldn't be that worried, honestly, right away at least. It's vertical at this point. So it's vertical. We're showing signs of overextension. As we move up to the highs, one thing that's worth pointing out, all right, so we're looking at, one, you could just look at the amount of longs with relation to shorts just from the more recent past few days. Longs very much more aggressive than shorts. But again, it's a spot-driven market, so that's worth pointing out. Always keeping that in context. But if we look at something like CVD, we zoom out, as a whole, buyers have become less aggressive at buying the highs, right? So less aggressive as a whole. So this is very bid driven, which is great. But if we look at how, the trend coming from down here, and we're seeing CVD making lower highs, you look at this and you ideally want to see that upon breakouts, you at least just see a spike in CVD. But if you look at this as a whole, what it's telling you is that, one, you do have absorption because you're able to make higher lows while this is moving down. But you're also, in the same sense, not seeing the same elevated levels in CVD to indicate that, overall, as we move up, buyers are becoming more and more and more and more aggressive towards buying at the highs. And that is, that's what you want to see for continued higher prices, right? You want to see that buyers are continuously chasing this up. So I think that's worth paying attention to. Let me look at the chat real quick. Cautiously bullish. Cautiously bullish. Yeah, absolutely. I think that, so it's always good to break things down in terms of time frame. I would say in the shorter term, in terms of the next couple of weeks, I would err on the side of caution and expect a pullback. But in the next 6 months, right, I'm expecting higher prices. So it's always important to make sure you're not mistaking one idea for the other, rather one interpretation of this for the other. Because again, if we just look at, and this is just comes right away, and it could be completely mistaken, but we just look at how previous structures have resolved. It hasn't been that the consolidation we've had has been, anything less than this consolidation right here. What are we're going on from the 27th to where we currently are now, 30th. It's 3 days. And I would say, at least we're looking at a week, sometimes 2 weeks. It's gotten shorter and shorter, which again, I said I want to be mindful of that because that to me is just a sign of a parabola in the making. And you're going to see, I think, in both the interim top and the total top, you're going to see a blow-off top, right? A big candle. I think that obviously it's going to last. It's going to be shorter than people expect, right? People are going to get really bearish when it happens, but I think it's going to happen either way. So if I look at this market right now, I'm looking at my significant levels. We're above all of them. That's fantastic, but I don't see any trades for myself, right? So I'm not really taking swing trades up here. As I said before, I was thinking, okay, if we, and I mentioned this the other day, we get above the other day's close or the open and we play back up to the value area high of the structure. So we already got that. If we maintained acceptance above this level, I would TP a trailing stop up here. Got that. It was stopped out already. Okay. So now again, doing this, applying that same idea. I'm not, because I'm not in the trade anymore. I don't know if I would want to take another long down at this level. Maybe it'll set up, and if I see the setup, I'll take it, right? If we come back down to this level, I guess I should start this by saying right here, I'm not interested in taking a trade. So right around, 28,271, I'm not interested. If we just look at the day, we're above value, right? That's great. We have a high that's likely going to be cleaned up. So again, I forgot to get into some more of the nuanced things we pay attention to. So value, we've been balanced. First breakout of that composite, a very balanced day. What are we looking to now that's a little bit more refined? Poor low, poor high. This high is more blunt than the low is, But the idea with this high is that we didn't find ourselves a major rejection at these higher prices. So it's not like upon breaking above this high, we had a major kickback. So if this was going to be a massive swing failure, normally what you would see is upon a break of this high, you were left with something that looked like this, a tail. And it'd probably look something more like this, right? Most of the activity would probably be reduced to staying under this high versus what we have here, which is, what you're seeing is actually good for the long side, which is an increased in activity up here, and it's holding the level. And this poor high means that we're probably, it doesn't mean, right? It's not dictating that we have to, but it's just more likely because that we came up here and we don't have an immediate rejection that we're going to come back up there, right? It's like if you find the weak spot in, whether if you're like a fullback or a running back and you find the weak spot in the line, you're probably going to continuously go back and press that spot. So here is the area that has not majorly rejected us. So we're probably going to come back to this level to see whether or not there's a seller up there. And until we find a seller, this will just end up continuing upward because we don't have it yet. So that's the benefit of Profile as well. What we're seeing right now is the price didn't find the other time frame participant. There's no excess. Excess is this, right? Excess is a selling tail, a buying tail, a buying tail. This is a decent high, but it's not the nicest one, right? Excess is that single print area. It's very imbalanced. It says that we were rejected. So that's another thing about the profile. Where was price accepted? Where was it rejected? Where did value accrue? Here's where price was accepted today. And we don't really have any price that technically rejected us or a level that rejected us. We opened here. We just moved up most of the day, retested down here, but we haven't been rejected yet. So you want to see that you're rejected at least if you're going to make a case for maybe having a high at all. But again, it could be close. So that's just something to keep in mind. Let's look at some other pairs. And again, just to reiterate, we don't have any absorption at the highs yet. We haven't had absorption, I don't think, once in this trend. So we haven't had a case of, just to show you right away, if we're looking at delta, and let's just use this for example, we're approaching this high again. This is where we were rejected prior, but it's not like we were really rejected, right? We just kind of rolled over. We had a little cluster here. We shouldn't be able to reapproach this level easily, right? If the other participant, the other time frame seller, going back to James Dalton's basics, if this was an area that rejected us, we shouldn't be able to come back to it easily. And if we look at this area and look how we're now on our way back there, delta's not doing anything, that different, right? It's showing that maybe buyers are less aggressive. Delta's much lower down here than this previous high. But if we had something like, I can't even find them because they're so few and far between lately. If we had a major delta divergence, that'd be maybe a sign of concern or a cause for concern, but we don't. And what that would be is, again, just to put that in perspective to where we currently sit. Worst case scenario, if I was painting it, would be high. Let's say we visit this high and I want to see a rejection in price action. So let's say we do something like this, move up here, consolidate again and have this backside failure. If we do that and we had delta all the way up here above that previous high, that's a sign of absorption, right? Especially if open interest is increasing. Open interest doesn't need to increase, right? So that's one thing that I always say I want to see. It's like I definitely want to see open interest increase because I would be willing to get behind that setup more because I know there's more firepower. Open interest doesn't need to increase because we still have the sign that it was absorbed more, right? It's just that the amount of absorption we saw was not necessarily a ton of new positions opening. So that is always worth pointing out, though, right? There's varying levels of, I think, intensity or rather significance when it comes to setups, and the more boxes you could check, the better. But we don't have any sign of that yet. We have no signs of absorption at the highs. The only thing that we see is, again, that's an indication of positioning is that the funding, the basis is getting quite wide at the highs or getting quite high, but that could continue to persist. It's just a cost of the trend at this point. So let's look at DOT because I want to look at DOT. DOT is, DOT is something that I'm not going to have it's not going to be the best thing to look at the profile with. You can, but it's an altcoin, so it's going to move a lot more unpredictably than Bitcoin. But if we put on the profile, just for example, to look at the last couple of days, you know, we have these trending days, break from balance down here. So trending days, balance day, and you can see that with the price action. But I'm not going to be too focused on getting into the minutia with Profile on DOT. When I'm looking at DOT right now, I'm seeing an asset that has a narrative, that has come off of a really strong trend, and has now put itself in a price discovery. So let's just make this chart naked. So if we're just going to basics, you know, where are you likely to find support? It could be anywhere from this high down to here. In a bull market, always anticipate to be front ran. Okay, always expect a shallower pullback. So if we're just going based on structure, this is an awesome breakout. You know, I want to say that, hey, it would be nice if we came down here. There's a great amount of structure down there, but you might never get it. All right. And if you weren't patient with DOT, you never got around to catching this either, because you did have this flip down here. If we look at this on the weekly, this entire pocket from the highs of these wicks down to the lows, I said that backwards, from the lows to the highs, all where we were rejected, you can see that that area, when we go to the daily, that's from here essentially down somewhere down here. Either way, you're seeing that this was a clear area of resistance, and when we broke through, it was acting as support. If you were just going to box these consolidations out, you could see that over time, just consider this the same way that we consider Profile. Here value is developing, and now imbalanced, and now we are developing higher. So value is being developed higher, rather value has been determined to be higher. Fair value is moving upward, right? So fair value moving upward, consolidations are moving higher, previous support turn resistance. I think now with DOT, you have to expect to be front ran, and it comes at a risk, right? The fibs can be useful, especially in confluence with other details. So we have the high of this previous all-time high, the 382 fib and the 0.5 fib are in this kind of sweet spot between 684 and around 64, so 640. You know, if we go down to the lower time frames, we might see that this is developing as a flag already, and you might not get that much of a pullback. But I think that, you know, it's dangerous to chase this. Maybe tag on a position up here, right? You tag on and then place limits down here, but this is looking super bullish, and people have really high expectations of DOT. If we look at the dollar right now, and most of the strong case for Bitcoin by traditional market participants is it's the dollar declining, right? And there's some people like Luke Gorman that has an idea of the dollar being at 50. So that is, you know, nuts. But everything is nuts. It's like a house of mirrors the last 20 years, the last year, 2020. So this is looking like shit, right? Technically, it's at an area of support, but just keep in mind, like, the one thing that I hate to see, and, you know, I make fun of traders charting Bitcoin dominance. There is something to be said for paying attention to Bitcoin dominance. It is telling you some valuable information, but it is really noisy and really, there's a lot, you know, you could just add cryptos to the world of the universe of crypto assets and throw that dominance off, right? People are not trading the chart the same way they're trading a Bitcoin chart. The index, the dollar index, people are trading it with TA, but it's an index, right? It's a basket of currencies. It's not going to, like, this support level is not going to hold the same way it would in Bitcoin. So this is the last area of major support, right? So historically, this is relevant. It goes back to 2018. We are coming to it now, but I don't know if things are going to be improving in the near future. With regard to the dollar, I think that we're going to continue to see assets like Bitcoin and assets like even equities appreciate, because people are just looking for any form of yield to get out of depreciating assets, right? And, you know, a hedge against inflation, right? We have interest rates that are really low right now, just rates in general are really low. Yield is really low across the board, almost none, negative. So this is something to always keep in mind, right? Any drastic changes to this, we have to be mindful. Any drastic changes in the dollar, it's probably too late for you by the time you look at the BTC chart, just to be honest. Uni is another one. I wanted to go over Uni because, again, high volume, relevant. Ah, shit. Missed it. Fuck. Didn't miss it, but not on my platform right now to begin to set anything up. Rather wait, honestly. Uni was a pain in the ass. So Uni, I was chomping at the bit back here. I got into Uni with comp. You guys on BlockRoots remember this, getting in and out of futures trades, chopped the fuck up. Shared my loss on Twitter. I think I lost like $7 grand in comp in just one trade. It was just gone. And Uni as well was a pretty substantial set of losses. Initially it was good, but I was holding thinking, oh, I'm buying into resistance, but in a bull market, buying into resistance means buying early, right? Getting an early ride on the train. Sure, it does sometimes, but it's not going to be that it leaves when you expect it. It might take a lot of the times. How do you feel when you look at alts that you've been in and out of? In a bull market, right? And even going back to previous bull market, you look at something a month later and you think, fuck, I got out of that. And I was in position, it just chopped around for a really long time. Now, the problem is, opportunity cost, right? You're tying up capital. So if you tie up capital in a position, you're basically taking away or borrowing from deploying that capital somewhere else. Now, you don't live in a trading utopia where, you just have your pick of the litter when it comes to trading opportunities, right? Everything is, in theory, a setup and an opportunity. But this is, I think that now, just going off of TA 101 basics, this has been compressing for a really long time. A compression of volatility, the longer you compress, the more you can expect this breakout to have follow through, or the larger the follow through you can expect. So this is an awesome structure, right? You have this massive move up, this low defended, perfect timing. If this occurred, if you had this big listing like the Binance IEOs in the bear market, if this occurred in the wrong market, this is coming the fuck back down, right? You would never want to buy this. It's in a gap. There's just a vacuum below you. But we have defended it. You're looking at weekly levels now. So this cluster, you get a weekly close through this cluster, you'd have the first weekly close. Now there's 4 days left. So weekly candle, 4 days left. It's kind of there's no sense in saying that it's satisfied that requirement. So the highest daily close though is around 434, right? So, the highest daily close is around 419. So right now we're at 434. Maybe you're going to put in the highest daily close in the last couple of months, and we have 5 hours left in the day, right? So if you get that close, that might be a pretty significant buy signal. So I would say to pay attention to this into the close, see if they're hammering it into the close. I'm kind of feeling like I want to get aggressive behind this now. What you have is a compression. Perfect timing, everything on its way up. You see some leaders that DOT was correlated to pretty heavily recently, and the correlations kind of broke down a little bit when BTC, ruined the party. But you have what? What are you looking at? Compression, equal highs, lower low, and now a shift, and you have a higher low in the making. This looks really good. This, Uniswap was that one of the more interesting things, just like 1inch. Uniswap was just given away. Everyone was given a Uniswap stimulus check for trading on Uniswap a few months ago. I sold mine, not as fast as I sold 1inch. So 1inch was ridiculous. I was given 4 figures worth of money, high 4 figures for nothing. But Uniswap, same sort of thing. A lot of free Uniswap was given away, and I think now that is shaken out. So you had supply given out, which is not good, right? Because then people have no incentive to hold, really. So this is looking really solid. And I think against BTC, it should be looking the same, which is ultimately what you want to see. So first things first, in this kind of market where it's BTC driven, I want to see the BTC chart. Is it turning, showing signs of strength against BTC? Absolutely. So defended the all-time low recently on the weekly. Not all-time low, because this is where the beginning was, right? But move into the daily low, significant low, sort of like this swing failure into that low. It doesn't have to break the low, so it doesn't have to break the low to be a swing failure. But I think that you're on your way now, and just the fact that this is showing signs of reversing again, and now you have this little pivot, so this little under over, higher, lower high, lower low, down, and now we're back, maybe going to treat this as support. And you might not, these things are textbook. We're saying these because they're textbook things, right? Oh, this would be the area to come treat as support. But in a bull market, you often don't get that, right? You get the reversal that just nukes all the way up. And then you have to think, it puts you in a position of thinking, well, shit, is it going to come back now? Do I need to buy sooner? And that's what creates this sort of serial correlation and momentum in markets, is that, there's a delayed response. The market doesn't disseminate information all at once, and you have people that are chasing it upward, right? So uni looks really good. What are we, an hour into this? Let me go through the questions now. So let's see. Smash it up. Thanks for hitting the likes, guys. We got a decent amount of likes. Okay. Could you go over a failed range extension? Let me pop the chat out so I can pull this over here. Okay. All right, so we looked at DOT. We did that already. Where did that top chat? No, I want to go to live chat, all the chat. There we go. All right, so looked over DOT. How come I can't see everything? Let me put this back because I could see some of the stuff. All right, so I can't see all the stuff when I'm not on this page. So 1 second. I mean, I could just pull this over. It doesn't matter. 1 sec. All right. Okie dokie. Okie doke. Oh, it didn't change anything. It was already wide enough. If anyone has, all right, so could you go over failed range extension and relate to poor highs and poor lows? So range extension, oh, Bitcoin's at 28378. Nice. This is, you know, we went over the poor highs earlier, so the poor high is just a target, right? It's an indication, again, that the market has not found a major seller yet. So you'd be looking for, you could look at a poor high as, you know, let's put poor highs in context. Let's say that this market had been balanced for the last few days, and let's say the last 2 days favored the upside of the structure and had poor highs. I'd look at this poor high setup if it was between a ultimate high, right? So this is the highest high, and let's say this was in the range at the value area high, and you have these poor highs. I would look at those as a breakout opportunity, right? Not a cleanup. So you have two poor highs right here, let's say. I'm drawing D's to give you the idea of the high being poor, right? Blunt top, flat top, right? That setup, I would look at that as maybe a breakout in the making because it's showing the market has not rejected. It's kind of rolling over there. You want to get, you're going to expect it's going to be revisited. When it's within the confines of a structure still and revisited, I think it's going to occur and resolve as a breakout. If you have a poor high that's at the high so far of the trend, I am inclined to weigh this maybe 50-50. It could be a swing failure in the making, right? So I want to be a little bit more mindful of this poor high because you could get the high, the extension, and then still break down. And it, you know, the poor high is just the poor high, a poor low. It's just it's a thing that should draw your attention, right? It's an area to mark out on your chart just to consider moving forward. All right, I want to pay attention to what happens when price comes into this level, and maybe have a thesis for what you think based on, again, some context. Okay. All right. Dumping on Stan. Do you see any pullback in BTC? Well, you know, institutions are bidding it up, right? But the one thing that you have to be careful of, because everyone likes to quote sort of like trading wisdom, is that you're going to get dumped on at some point by institutions, and they're going to be really bullish at the high. It's sort of like when Goldman releases guidance or releases, their expectations for certain stocks, and it's always, they're just looking for liquidity a lot of the time. Hey, we're really bullish on XYZ stock, and you look at it and it's like already extended ridiculously, and there's no change, no catalyst. Well, they're looking for liquidity, right? But in this case, Bitcoin is really small and it's underallocated to, so, and you're also in an echo chamber, so you might think that the institutions are talking and they're talking to everybody, but really a lot of people, everybody are people that don't even have any allocations yet, that still are going to be like, I'm not interested, right? So I think that institutions are just jumping at opportunities, yeah, but I still think you're going to see corrections. But institutions do protect downside, right? They could put in floors, they can afford to. Sort of like a central bank putting in a floor, right? Okay. Looked at DOT. Backtest strategies with TA. A lot of order flow strategies, if they're not mechanical, then, if they're purely discretionary, non-mechanical, based on maybe certain nuances, certain idiosyncrasies, some of my setups are based on that. The backtesting is going to be off of just manually recording that information and backtesting based on that. Visually checking it, because otherwise, there's not a lot of stuff I look for on some of the more nuanced setups. I can't just plug it into a computer and see the historical data on it. Okay, let's see. Link, I think, is let's see, I think Link is just showing signs of weakness, right? Yeah, I mean, Link is not looking too pretty, honestly. Looking at a lower high so far, right? The Link has gone on after this to put in longer consolidations. I don't think the Link is jumping at the bit right now. If you look at Link versus BTC, it's even worse. It's really bad, right? Link BTC is just falling off a cliff. This is showing relative. This is showing how it's performing relative to BTC, and so it doesn't make sense to be in something right now that's underperforming. It would make sense to be in Bitcoin instead of Link, right? Where'd the chat go? All right. The flashing tickers. These are AGGR.trade. Okay, this is very useful, but it's something that requires a lot of screen time to really develop a use case for. Otherwise, you're just going to you're going to think you see things that you're actually just not, that are just not worth acting on. You know, you're looking at high frequency information, not high frequency like HFT, but just there's a lot of information to take in. To be able to pick up patterns takes a long time. And even if you think you do see patterns after a long time, a lot of them are not patterns. It's just your brain wanting to see patterns because it's a survival mechanism. Okay. Yep, no confidence in Link right now. Yeah, typing with 100 people watching. Type in www.blockroots.com. For some reason, just the regular blockroots.com isn't working. I don't know why. Hi, dickhead. Drama, I don't know who you are, but I guess I'm going to find out as we move lower if you've said anything stupid. Why is this guy bearish? Yeah. Cautiously bullish, dude. Yeah, super bullish. The market is ripping. It's so funny whenever I say something like, you know, like when I was hedging, like I'm hedging because I think that January will play out a certain way. Oh, I forgot my snack. And it's going to the end of the year, right? I don't know how people are going to respond with taxes. I had a snack that I forgot to eat. It's Castrovillo olives and pepperoncinis. Woo! All right, excuse me. Where do we put stop losses for BTC? Hold on one second. I mean, I'm not going to tell you where to put stop losses. I've gone over a lot of times how you could go about placing stop losses, but there is no perfect way to put a stop loss. The best stop losses take into account the amount of volatility the asset has so that you are not placing the stop loss blindly, right? If Bitcoin is moving an average of $1,000 a day, if your stop is $50, you're an idiot, right? Your stop should take into account volatility. So you could use something like ATR. So average true range. You could use something like, you know, what I have on Sierra and what I have on Exo charts is always being mindful of the 30-minute average subperiod rotation size. So the 30-minute average range size. So average size of a 30-minute candle. Right now it's 285 today. Okay, so I'm not going to place a stop that is egregiously lower than that. It wouldn't make sense, right? Because it's not taking into account what is expected already. You know, your stop should always take into account the amount of volatility the asset has. Now, structural stops are really popular. People use structural stops because a lot of the time structure is what defines their trade. Your stop should be in a place where your trade is invalidated, right? So that's why volatility is really important for a stop, because if you're in a trending market, trends are really messy, right? They're really noisy. You don't want to be stopped out due to noise. So a trend will have certain characteristics. One is volatility. So you have to take that into account. Other people use things like moving averages as a stop, right? A couple candle closes through a major moving average trend, cooling off. Some people use tail risk stops. Sometimes I use a tail risk stop where I won't be placing a hard stop because I know that on these exchanges you could get wicked out and it's unfair, and my trade won't be invalidated, and I'm willing to actually sit in front of the trade and monitor it if I'm scalping on the lower time frames, and I'll place a tail risk stop because I'm still going to pull myself out of the trade either way. But my tail risk stop is, let's just put that in perspective. Imagine if I'm trading this up here, a tail risk stop might be 5% below, 10% below where the current price is, and it's just oh fuck, if I went to the bathroom and something, the market crashed because of who knows, right? Some major liquidity crisis like in March. It protects me against tail risk. And you could only read about tail risk. You read about it in like a Nassim Taleb book. You could only find cases of tail risk in hindsight. No one is good at predicting when those things actually occur, right? Moving forward. So you might have an idea of like the conditions that would, have to occur for major things to happen, but they always occur at a left field, right? It's only something you can look at in hindsight with a level of accuracy. Otherwise, who knows what's going to happen? Who knows, right? Government could come out in an hour from now and say that they're going to knock down anyone's door who has ever ordered a Ledger wallet, right? You never know, right? But I would want to be protected in the event that the market crashed. The tail risk stop is not what I would want to hit, but it's the thing that I have on that is like it's insurance, right? For worst case, I don't crush my portfolio, but it's wide enough to where I could monitor their trade, not worried about being stopped out in the interim. There's plenty of different ways to place a stop, plenty of different ways to skin a cat, there's plenty of different ways to trade. So yeah. But this is more than being mindful. This is literally thinking this through with maybe too much concern. My thoughts are kind of CanteringClark is expressing too much time, expressing concern from being cautious when I think it would be wiser to discuss levels of buy across all time frames. I've gone over levels already. Yeah. Yeah, you want to focus on the buy side by all means. All the levels are pointed out already. It's really enticing, right, to just like jump into the bandwagon of being super bullish, right? And I am definitely bullish on the higher time frame, but I'm a short-term trader. I have my higher time frame portfolio allocation, and by all means, if you want to do exactly what you want to do, but I always think it's important to point out things that have worked for me. I think that you're watching this stream because one of us is pretty good at this. Not to be a dickhead, but by all means, I could point out the levels to you that are important. It's just that they're fucking obvious. It's 26,500. We have a small daily cluster. You have the next cluster down at 23,850, down to 22,640, 19,850 down here. All right, if price comes back down to them and you see absorption, buy it. Right, so we just cover that. That's like there's nothing that doesn't do anything for you. Right, so that's like what if the market operated in a vacuum and just was very textbook with okay, if this happens, then that. Right, that's not applying any kind of I would say there's no discretion in that. And by all means, but that's already covered. I don't know why we can't go off on a little bit of a tangent and talk about how we feel. Yeah. Looking at the story of the market, I don't see much reason to believe market is losing momentum. I think day trading is losing formula. Cool. Well, Nisep, if you think day trading is losing formula for most people, that's awesome. Yeah, well, focusing on the buy side of the trend is like putting your head in the sand to reality. Reality is that people are most exuberant and most optimistic at the high at some point, right? So you could continue to operate that way by all means, but like I said, on a long enough timeline, I think that you'll get hurt not taking certain things into consideration that are pretty idiosyncratic actually. or rather pretty nuanced. So when I'm pointing out the reasons why maybe to be cautious, it's because there's an actual mechanical thing taking place where the futures market is getting more overextended than the spot market compared to previous norms. So this is not just something of, oh, we're trading at a $20 premium. It's no, norms were $20 premium, norms were this percentage difference, and now we are double that, right? We're a multiple of that. And organic buying activity is what this whole trend is built on. So you're not going to see the market get dragged up by the futures market. Okay, so when you start to see that the futures market is getting overextended, by all means, if you want to buy that, go ahead and buy it. But there are better opportunities to get involved at more important contextual risk reward levels. And I don't mean to shit on you, but I've been doing this for a really long time and I have a lot to show for it. So, you know, I went over the levels. By all means, place your bids. Yeah. No, I'm just sad to see people lose money. Yeah, well, this person hasn't lost money really much in the last 9 months. So Nisepe, this is just an indication that you don't know what you're talking about. Because holding a perps long right now is a really fucking dumb thing to do. All right. So if you hold a perps long, you're experiencing what you would experience if you held an option, right? That was decaying over time. There's sort of a theta decay to a perp. So you're holding a perp and the cost to borrow it right now is on an average of 10 basis points. So if you're applying what I would expect most retail to apply, which is leverage, you're going to be eating out of your initial position just to control that position. So holding a perp is a fucking dumb thing to do, honestly. So if you want to talk about linear futures, that makes sense. But holding a perp is pretty stupid. So theoretically, you could actually liquidate your position by holding a perpetual swap. So by all means, hold on to a perpetual swap. Yeah, no, I'm not looking to short Bitcoin whatsoever. So again, yeah, Nisepe, maybe this is the wrong stream for you. You know, by all means, go to Barnes & Noble and pick up Technical Analysis of the Financial Markets by whoever it is and start with the basics. But in the long run, just looking at lines on the chart is not going to make you money. I promise you that. Yeah. Okay, so... Okay. Stacking, going through these... Randall, okay, entering BTC, okay, regarding, so one thing to pay attention to with institutional behavior is what they're actually doing. So if you are an asset manager and you're operating in the United States, you fall under the guidance of the SEC. Everyone falls under the long arm of the SEC, by the way, if you're catering to United States customers. If you're managing more than $100 million, you have to comply with their 13F rules, right? So we posted about this in the newsletter. I'm going through this so I could chew my olive. But this is basically a regulatory requirement of asset managers that are managing over $100 million in assets that they report what they're holding, right? And this is done every quarter. So what we're going to see in the next 2 to 3 weeks by mandate is that a bunch of asset managers probably come out publicly with not only their speculation on this being a successful asset in the long run and maybe them thinking it's going to be good, but them actually being obligated to list whether or not they hold it. Yeah, ATR. Damn, son. Yes. Damn, I wish that guy stayed around so I could school him. Yeah, so that's the kind of stuff I'm talking about. Like, if you want to go ahead and be completely blind to what is taking place with regard to market internals, be my guest. The same sort of person probably thinks that you could just trade off of a couple lines on the chart and logging into it 5 minutes a day, but that's not how it works, right? So by all means, I think that the person probably misinterpreted the fact that I was just pointing out what to be mindful of, and is forgetting the fact that I have said on numerous occasions that beyond the next month, right, I am in the high time frame extremely bullish, right? So you'd have to probably be a fucking moron to miss that or not follow me. And like I said, there'll be no punches pulled moving forward. So, and I think that that'd be good because it'll help filter out who should be here and who shouldn't. So I don't know, honestly. I don't know, D. Ross. I'm not sure. You know, we see people like Scaramucci who said that he had I think a $25 million interest, and now I think it's $180 million. I think that they would want a substantial portion of this pie, right? So I think we're going to wrap it up, but I want to go over important points before wrapping it up. Things I think that you should be paying attention to. Hopefully that guy comes out with a stream soon so we could all watch and just buy. He's going to be holding his funding until it's until there's half of it left. But we can't save them all, can we? All right. Lower this. Lower this. Where's my notepad? Oh, there it is. Okay. So things to focus on moving forward, right? And you guys can ask some questions in the meantime. Just to reiterate, just to make sure that I touched on those levels. Yes, this is a nice little flip right now of this composite. Very well could lead to continuation. My short-term trades are off the table right now, out of my hedge, just so that that fucking moron knows that I am long again. A Banks will appreciate this. But the next significant levels, there's no sense in denying that they're decently below us, right? Decently below us now. So we're sitting, if you just want to quantify this, we are currently sitting 15% above a significant support level, and there's really no level to define a reasonable short. So not looking to short this. But what I do want to talk about are important things moving forward. So sec. Okay, can you hear me now? Definitely can hear me now because I see, you know, I jinxed it, guys. I said in the beginning, how long does this go? Record everything. Irony. Okay, so, okay. Okay. No volume, no sound. Oh my God, this goes back. Oh no. All right, so someone type me when we left off. That is ridiculous. All right. Sound back. Okay. So where did we leave off? Did you hear me talk about managing expectations? Oh man. Nothing. I didn't do anything, Stan. I don't know what's going on. It does that randomly. So where do we leave off? I'll quickly touch on all these again. I'm wondering why A Banks called me. And then I had that sinking feeling of like, oh shit. There's only one reason why he would call me. Okay. Okay, so all right, good stuff. No problem. So treat trading like a small business, okay? Take it seriously. That's what you're going to be doing, right? Okay. Treat trading like a small business, all right? Recording everything. That's absolutely paramount. Never putting your entire business at risk, right? Never risking the house, okay? So this gets into position sizing, risk management, protecting your capital. But what I really want to focus on is how you can fine tune this. So knowing when your business hours are, this is something that I don't think is touched on frequently enough. So knowing when your business hours are, what that means is in recording all of your trading and using some software that might do that for you, knowing, hey, do I perform better on Friday evenings than I do on Monday mornings? All right, is there something consistently across the board that continues to repeat? Am I consistently better towards the end of the week? Where do most of my losers occur, right? Is there a pattern, okay? And you could break this down to days of the week. You could break this down to hours of the day. You could break this down to time of the year, which would get into seasonality. But knowing when your business does best, right? So what you can ultimately see is, where are there areas where you might need improving, and the areas that you're succeeding in, right? Those periods, is there something that is consistent? Is it the case that my small business does well on Fridays? Is it the case that I just do well on Fridays, or is that the case of it being a time when I should trade because maybe that's when there's more volatility? So treating your trading like a small business, all right? So recording everything, knowing when your business hours are. So I'll go back to managing expectations now. So managing expectations, this is, as you can imagine what this is, there's a lot of new people that have the idea that they are going to turn, $100 into $100,000. And I think that's a really poor way to come into the market. The problem is you're going to be inundated with people around you that are talking about doing that. They're talking about how much money they just made, and constantly you're being inundated with it to the point where you're feeling maybe like you have to do the same and you have to speed up your process. Every person's trading journey is unique. I hate to use the term journey, it sounds corny, but everyone's trading is unique, right? Especially if you're a discretionary person, okay? You have to first start building a foundation. And managing expectations, some people might. There's a bunch of traders that have started and hit a home run early on, and they built their capital from that. Because you don't want to trade when you're undercapitalized. So make sure that you're coming to the market with, something to use, right? And then you're protecting that. So the managing expectations part is so important because, again, at this time within the market, there's going to be movement left and right. There's going to be assets that are moving up 100% in a day, 50% in a day. And you're going to see those in hindsight, and you're going to start looking for those. But just understand that in the beginning, it's very unlikely that you are going to be able to spot them, right? As a newer trader, it's also very unlikely that if you are someone who grows tremendously in the beginning, that the odds are stacked against you that you're able to even hold on to that capital. So I think that in the beginning, you have to come from a very grounded state and knowing what you're getting involved in. So managing expectations, treating your trading like a small business, which is knowing when your business does well, so knowing your best business hours. And then the last thing that I wanted to touch on was let's see. I had this written down somewhere. I had a couple points I wanted to touch on. I was going to share one of them. I was going to pick a few. Oh, here we go. Sorry. Okay, and then lastly, okay, don't try to make sense of everything. All right, so don't try to make sense of everything. Okay, stick to a few things. All right, your system has to be built on, and I've said this before, mine is basically built on 4 to 5 things, and I'll take a trade if sometimes even 2 or 3 of them are satisfied. A lot of times if half of them are satisfied, so 3 is fine. But don't try to make sense of everything in the market, especially when this comes to the broader market. 2020 was a really tough year for a lot of people to comprehend because, well, how is the market moving up when the economy seems like it's on fire, right? Half the world is shut down and we have the S&P moving up. Don't try to make sense of everything. Try to determine how things are working based on current conditions and just play, right? And play based on those conditions, right? Play based on the way that the game is unrolling in front of you, right? Don't try to make sense of it, okay? Don't get too stuck in like market philosophy, right? Understand how the internals are operating, understand how the system is working, but don't try to make sense of every little detail. It's going to be way too much to pay attention to. I see this with a lot of new traders, and I think that it's newer traders especially that are trying to build a following early. They're like trying to share every little detail about the market that they're recognizing. And to anyone who's been doing this long enough, you just realize that there's no way that they could take a trade, right? There's way too many details they're trying to pay attention to. They're trying to build this complete picture, and it's really important to, it's important if you're in crypto that you are somewhat of a generalist, but don't try to understand everything. Don't try to make sense of every little detail. Don't try to have everything covered. It's an impossible task. Try to get really good at, I would say, 3 to 4 things, 3 to 5 things, and then just focus on those. And then maybe you have that so figured out that you could begin to build a new thesis, right? You could begin to build a new strategy. But don't in the beginning approach with the idea that you are going to, take it all in, right? And you're going to figure out the market, right? No one does, okay? There's a ton of randomness also. So it doesn't make sense for you to do that in the beginning. Hopefully I didn't cut out during that. There we go. So yeah. So sorry about the sound. So when you scalp many times a day, how do you do the journal? So all my journaling is automated, so it's through API. So I use, and it's for one of my accounts, even though I have a few accounts on this exchange. Well, actually no, so I have more than one of the CoinMarketMan, but I use CoinMarketMan. So I use CoinMarketMan because it automatically journals everything. Anything else? I think we're like an hour and 40 minutes into this. Probably going to cut out. Sorry about the sound, guys. Yeah, I think that about wraps it up. So don't save. One more thing with BTC. Yeah, we're going back up to Tesla high. Probably could have held on to that a little bit longer, but it is what it is, right? ETH. A lot more balance in BTC. If BTC breaks out, I expect that ETH is going to follow. DOT looking great, but again, this pocket would be an awesome buy opportunity if it came. So 684 down to 650. Uni probably already broke out. Nope. So Uni, if we could close through this high, yeah, we have a new daily high, but even better would be if we could maintain this on the weekly, because that would be very significant, breaking through this weekly cluster. But we have 4 days long in that. 4 days left. CoinMarketMan doesn't know if you scale in or scale out. It just shows the total position. But it updates the size based on the scale and the average you got in at. No, I'm not afraid of APIs. It doesn't allow you to trade. It's a read only. Okay. What do you think of exchange inflows and outflows for alts? For alts, I don't know enough about. That's not my forte.
I think that it's good that we're not seeing a tremendous amount of inflows with regard to BTC being deposited on exchanges, right? In the case of where the market would be maybe selling off or people are going to take profits, we're not seeing that. So I don't follow alts enough or all the relationships between exchanges with alts, so I honestly don't have an opinion on that crypto rise. So yeah, and I'm not afraid of APIs. You give it permission for what you're allowing it to do, and it's for read only. Dot looking good. So yeah, guys, that about covers it. BTC is in the same spot it was this morning, right? So looking nice, though. Looking nice, just taking a little bit longer than the last breakout. But yeah, there's no reason to be bearish on BTC. Hopefully that moron understands what I was talking about in the beginning and just pointing out what things are irrefutable. So you can't refute the fact that funding is high. It's a fucking objective feature. So, all right, guys, that's going to be it. Everyone have a fantastic evening. Hopefully you enjoyed the stream. All right, take care.